Hello everyone, this is Alexander Nikolov. Today I'm going to take a look at the gold stock, the gold and gold stocks. As you know, gold has been quite strong, but recently topped out. The first top came in August. The price of gold declined more than $200 for just 3 or 4 days. Then the market recovered and made a slightly new high at the beginning of September, but then again pulled back. So there are some talks that the gold was overextended and the top was made here, and some kind of a consolidation with downside bias is underway, or even that gold has entered the bear market. But let's see what the charts tell us. Well, there is a small divergence at the most recent high, but other than that, the market remains in very strong uptrend, with prices well above the rising 100-day and 200-day moving averages, and around the 21-day moving average. So considering the sharp decline in August, the best case scenario here is for a triangle consolidation. So I expect to see a triangle here from the August top near 1900. This pattern is likely to last another month or so, and then, if correct, the gold's uptrend will resume in sometime in October or early November, and gold will head to new highs, probably well above the 2000 level. So the trend is strong here, and of course everything can change, but right now there is no evidence of a top, of an important top, so I assume higher prices ahead for gold. The picture in silver is a bit different. Silver has been outperforming gold for several months. It was much stronger earlier this year, but after it topped out in late April, early May, it declined so sharp, more than 35% for a week or two, and after that it started to lag the price of gold. But still, despite this huge decline here, silver did never move below the rising 200-day moving average. Notice how the price action is above the rising 200-day moving average, so the medium-term uptrend here is still intact. As for the shorter-term outlook, it's more kind of a mess here, but still, right now, the prices are above the rising 100-day moving average, which acts as good support. So as long as the prices stay above 3880 level, where currently the 100-day moving average is located, I can say that there is a slight upside bias in place here. But of course the trend is not as strong as the one in gold. And what about gold stocks? Gold stocks have been a leading group for several months. They also collapsed in early August when the market fell sharply, but recovered very quickly and recently made new all-time highs. The chart pattern looks very promising, considering the breakout above the 64 level. Notice this level acted as resistance in December of last year, and then in April of this year, and then in mid-August. But once but then it was cleared in late August and early September. Of course, the gold stocks are quite choppy and volatile, so this breakout couldn't hold. The prices slept below this breakout level and closed right at the 64 level, right at the breakout level last Friday. But still, I think that the uptrend is intact, and only if a decline below 61 is seen, I will be concerned that there is a false breakout here. Now I think the breakout is for real. Notice there is no divergence between the price and the MACD oscillator, so overall I expect higher prices, of course, as long as the 6160 levels hold. And to show you the strength in this group, let's take a look at 2-3 individual names. Probably one of the most important, compelling chart pattern can be seen in Yamana Gold, AUY. Notice once the stock broke in July above the long-term resistance at 1350 level, it established a strong uptrend, and despite the recent pullback, this trend is really strong. The price is currently near the rising 21-day moving average and well above the 100-day and 200-day moving averages, with no divergence between the price and oscillator. So really an impressive uptrend here. And the other stock, of course there are many stocks that you can look at, but the other stock that is very spectacular in terms of the gains that it has achieved for the past 3 or 4 months is the Royal Gold stock, the RGLD stock. Notice this is a classical textbook price pattern. The stock broke out above the 55 level. The 55 level was a strong resistance, actually long-term resistance, acting as resistance. This level acted as resistance for quite some time, but once it was broken out, then the prices advanced, pulled back again once, then pulled back the second time, but this level held as support, and eventually a strong uptrend emerged from mid-June up to now, and as you can see, the stock rallied from 55 to above 80. And right now the uptrend is really strong. Of course, the question is, how can you enter such a strong uptrend, because the stock is obviously overextended. If you're a very short-term trader, you can try to enter somewhere here near the current levels and try to place a stop below the rising 21-day moving average and below a last level of support. If you are more medium-term investor, then you probably should wait for a pullback, not only for this stock, but in any kind of stocks that had such strong uptrend. Wait for some pullback to find the low risk entry point and place your stop below the respective 100-day or 200-day moving average. And finally, one last example, Newmont mining. This stock is not as strong as the previous two, but again you see a nice uptrend here, and recently the stock broke out to new all-time highs above long-term resistance at 65, pulled back below this resistance but closed above it on Friday. So overall nice pattern, and in conclusion I can say that I expect some sideways consolidation in gold for the next month or so, followed by another strong advance later this year. And as for gold stocks, they are strong and are likely to remain one of the strongest sectors in the market. Thanks for watching, and see you soon.